Hello guys, good afternoon. This is FTS once again. I am not a financial advisor, neither do I give financial advice. This video is for educational purpose only, and as we know, past profits do not guarantee future result. The forex market is volatile. As you take your trades, apply caution and also apply risk management. All right, on Friday we had NFP and we saw the outcome of the job report, right? So as expected, the job data was supposed to be 75, right? Based on forecast, but what actually came out was 22,000 instead of 75,000, right? So because of that, the United States dollar crashed massively, right? And as we have established before, we know the dollar has been bearish, right? So investors are priced in for rate cut, right? So this data has given it an open edge, right? To for the dollar, to crash more, meaning uh on the 17th of this month, which is 10 days from today, right? We're expecting the the Fed, that is the FOMC meeting for them to announce rate cut. You understand, right? Yeah, so activities for this include on Monday, be tomorrow, which is Morbid Monday, the only hyper news we have is GDP quarter for Japanese yen. Then on Wednesday, there's no hyper till Tuesday. Then on Wednesday, we have PPI, right? PPI month crude oil and 10 years note auction. Thursday, we have interest rate for ECB, right? European Central Bank, right? So we're expecting interest rate. So as expected, they based on what we heard from ECB, they said that ECB, the rate cuts, ECB rate cut are over and inflation will hold at 2.2, polls have said, right? So, from the kind of vibe they are giving, sorry, they're not going to cut rate anymore, right? That means their cutting cycle has ended. So they must start hiking rate from next year, mean from 2026, right? Say the European Central Bank is done lowering interest rate with fresh projections set to confirm if inflation will hold a target over the medium term, right? So, respondent expects the deposit rate to remain at 2% through at least the end of next year, right? That means through the end of 2026, right? With about a quarter anticipating one or more increase between June and December 2026. That means by next year, instead of cutting rate, they should start hiking rate, right? Yeah, so economists are less certain about where the economy is headed, with some citing potential challenge such as tariff, European defense spending, and geopolitics that could alter the Eurozone economic projections, right? So you can see what they are saying already, right? So for this, I think we know where it's going already. So the way it is right now is EU, their rate is going to be sticky, right? Yeah. Then on that same Thursday, the inflation data for the United States, right, with CPI, right, being CPI okay, being 2.7, so being 2.7, right? So as expected, inflation might start going up. The inflation might start going up based on market expectation, but let's wait and see, right? Yeah. Then on Friday, GDP for GBP, right? Yeah, month of month. So the most important activity for the week is on Thursday. Thursday and let's say Wednesday, Thursday, right? So those are the most important days for the week, Wednesday, Thursday, right? So let's head to the analysis proper, right? So as we all know, on Friday, being NFP, we saw the job report, right? Yeah, so the dollar crashed massively and we saw what happened, right? So this was what Trump was even expecting. Trump was expecting a rate cut, right? And now if you look at the Fed rate watch too, you can see easing is 100%, right? Easing is 100%. As at before Friday, it was 87%, and after which easing means their tendency to what to cut rate. That means 100% that the Feds are cutting rate on the 17th, right? So, which is 10 days from today, right? Some school of thought are saying, okay, that they might likely cut rate by 25 basis points. Some say 50, right? So, but nonetheless, they're expected to cut rate twice, very cut rate twice this year. So we're expecting rate cuts this September and maybe October or December, depending on what the Fed choose to do, right? So we're expecting rate cuts September and October. So you can see from here that on the 17th of this month, they're cutting rate by 25 basis points. Some school of thought are saying that they might cut rate by 50 basis points. Aggressiveness of the rate cut because of the poor job report that came out 25,000 against the expectation of 75,000, right? Yeah, so September, October, right? So we're expecting minimum of at least two rate cuts this month, right? This year, right? So let's head back here and see. So the week job data increased Fed rate cut expectations, right? So we're expecting either 25 basis point price that have been priced in or 50 basis point. Labor market revision could show major downward revision in jobs, right? Then another reason is that the CPI that's coming up this thing on Thursday, right? So if the CPI is below market expectations or above market expectations, right, it's going to increase the level at which dollar will be under pressure, right? Yeah. So, it said CPI or PPI could cap downside if hot, right? That means if it is above market expectation, right, it will be hot there. But right now, market bias is towards easy. So we're looking at, you know, easy being 100%, right? Yeah. So technically, it says that dollar index broke the low of August, right? That means the dollar crashed massively to the low of August and price broke the low of August, right? So that is that for the United States. So dollar is bearish. That is what I'm trying to say. The dollar is bearish. So the dollar is still bearish, right? So but on Monday, we might expect retracement, right? Because the market is giving a vibe of retracement. So just stay focused. Once we have that retracement, we should look for a way to sell the dollar. When I mean sell the dollar, I'm talking about we are selling USD JPY or the dollar base pair, the pair that have dollar at the base side, right? Like USD JPY, USD CAD, and USD CHF, right? Or USD ZAR, as the case may be. So if you are trading ZAR, right? South Africa rand. But on the contrary, we are bullish on the pairs that have dollar at the quote side. That means gold, we are bullish on gold, right? Yeah, so we are bullish on gold, we're bearish on the dollar, right? So as you all know, I normally use dollar index to scale my market, right? Because dollar index is mainly the basket of the major pairs, right? When I mean major pairs, euro, I mean card, I mean British pounds, I mean Japanese yen, Australian dollar, New Zealand dollar, right? And Swiss franc, right? Against the United States dollar. So that is dollar index. So dollar index is the way is when you weigh the basket of the major pairs against the dollar itself, right? So the dollar controls every major pair in the market, right? So if the dollar is bullish, all right, based on the quote and the base side of these currencies, they will go bullish or bearish, right? So based on that note, we are saying that we might likely say GBP itself will be bullish, yes, because sterling is riding on the broad USD weakness. That is exactly what I was trying to say. As the dollar is weak, sterling should be what strong because of GBP USD. So GBP is on the base side, while USD is weak for GBP USD. So as a result, GBP USD we should expect a bullish move, right? Then point number two says domestic challenges, right? So domestic challenges like fiscal stress, ONS data issues, then political noise, right? Still weigh structurally, but near term low, right? So it supports a stronger British pound, right? So technically, there was a rebound after that NFP that happened on Friday. Now let's head over to Euro. Okay, Euro is bullish because of the bearish dollar, right? So we're experiencing bullish euro, right? So like I've said, when you trade when you weigh dollar against the basket of major pairs, right? So when you weigh them like that, whenever anything that affects the dollar affects the major pairs, right? Can be bullish, can be bearish. So if the dollar is weak, we expect all the major pairs that have dollar at the base side to be weak, while ones that have dollar at the quote side to be what? Strong, right? So say US German 2 year spread narrows to a new low, right? Yeah, because of the United States NFP data, right? So we have a supportive, stronger euro, right? Because the German US pair, right? Yeah, 2 years yield spread narrows to 2 year low because of the crash that happened on Friday. So French government instability plus a Finch downgrade threat could weigh in, but these are seen as political noise versus the Fed rate cut, right? So in essence, all of this could have made the euro to be weak, but because of the Fed rate, the rate cut that is going to happen on the 17th, right? Yeah. And apart from that, we saw that the ECB, like we said before, right, that they no longer cut rate again, right? So their rate is sticky. So whenever rate is sticky, whenever one country rate is going to be sticky for some time, when one is cutting rate, the one that is sticky ought to be stronger than the one that is cutting rate, right? So that is one of the technique we use in analyzing we use trading fundamental analysis. Then for JPY, for JPY to be bullish, right? Yeah, because of the fall in the dollar, right? So USD JPY dropped as US 10 years fell sharply, right? After NAP. So Bank of Japan hike odds, right? It's less than 50%. Less than 50% that they will likely hike rates now, right? Nevertheless, safe haven is playing out because of the US dollar is on a hot seat. Investors will likely go to save their monies on safe haven. So they'll likely buy Japanese yen, right? Then apart from that, we saw that Shigeru Ichiba, right? Yeah, the Shigeru Shiba is likely going to step down, right? Yeah, he has agreed to step down Japanese Prime Minister. So volatility risk rise in Japan. Japan market with Chiba set to what? To depart because he lost the election 3 months ago. And at least I told us and we made profit from that, right? So Japanese market face the prospect of more instability as investors prepare for the departure of Prime Minister Shigeru Ichiba and guessing game of who's to come next, right? So the yen is likely to come under pressure, and long maturity Japanese sovereign bond are particularly vulnerable to selling due to the heightened concerns over government spending. Then views are mixed on Japanese shares, right? Which would which uh which would normally be expected to benefit from any other fiscal stimulus and a weaker yen. But before at the open of the Monday due to impact of United States employment data because of the NFU, right? Yeah, so you can see how United States data is affecting everything. Nevertheless, Aussie is said to be neutral. Yes, Aussie is said to be neutral because of the DSY, right? So it's going to benefit Australian dollar, right? Yeah, yeah. But nevertheless, our Reserve Bank of Australia easing expectations are being pared back. So less dovish than what than before because of the US state, sorry, because of the NFP data United States, right? Yeah, it's less dovish than before than it is, right? So, so that is that. I think we should go to the technical analysis right now. All right, so back to the technical analysis, right? So we have already established that dollar is bearish, right? So for me, I'm waiting for the retracement, right? So for me, I'm waiting for retracement back into the zone. So this is H4. Let's go to H2, right? Yeah, so I'm expecting retracement because sorry, because I've sensed price will likely do retracement from here because I've seen two, three candlestick formation here. So which is a strong rejection, right? Yeah, so price may likely come back into the zone before heading to the downside. Right? So Mondays just become right. Why we look for a retracement of the dollar index, right? So if the dollar index retrace into the zone, at least we might likely sell the dollar more. So for me, I'm expecting yeah, so dollar should hit here, right? So for me, I'm gonna wait until I get a bearish signal to sell the dollar, right? So if the dollar hits here, then I should look for a sell, right? Yeah, but as it is right now, for probability of dollar coming here is so low. But I'm expecting dollar to test this bearish order block, then dollar should go to the downside again. Then for gold, gold did a new all-time high of 3,600, right? So looking at price action from looking at the what I'm expecting, just a minute. Okay, what I was looking for. So, yeah, so I'm seeing a a sign of a stronger pullback here. Right? So I'm seeing a sign of a stronger pullback from here, because if you look at it from M15, you see a strong pullback from there. So gold gonna drop, yeah, massively to the downside on Monday. So Monday, I'm expecting a sharp move for gold, right? So before going up again, and based on um, Goldman Sachs prediction, gold should be heading to 5,000 because as the Fed would definitely cut rate, right? Yeah, we expect a stronger bullish move for the gold, right? But on Monday, we likely get retracement, right? Yeah, so we see all price levels of see all possibility that uh, we are seeing a move again. Okay, so these are different levels that you know. Okay, sorry. Ah, but I would prefer gold coming here, right? Yeah, let me see 45 minutes time frame and see the setup. Yes, I'll prefer gold coming there. So the fair value gap has been used up here, and this is the candle, right? So there's no fair value gap here, but this zone is still okay, right? Yeah, but for me, I will likely use this level. No. Okay, I would already use this level. This level is still okay, but price might start to come here. Depends, right? But for Monday, gold is going to do retracement. So I'm expecting a pullback for gold on Mondays, right? Yeah. So gold is bullish. Yeah. So Bitcoin is still bullish for me. I will likely wait for Bitcoin to do a push to the downside before actually taking off again, right? Yeah, this is a good level because here we're still, because as the dollar is going down, mm, so this level is still valid, and level is very valid. True, it's so valid. So I'm expecting this price to come to this level for taking off, or price might even use this level again, the one we used before, right? Yeah, this price might use this level, and here we might add as liquidity, right? So by Monday or Tuesday, I might refine this place. If this place did not hold, I might refine this thing and see where price will likely go, right? So we're bullish on Bitcoin, therefore GBP, USD, we are also bullish. So I'm expecting a a push to the downside for GBP, right? Yeah, a push to the downside. This is the analysis that price did not even hit, but let's say price come all the way to the down for these levels. This place is still holding, right? Yeah, this place is still going to hold. This place still going to hold, right? So for me, I'm expecting price to come to this place, or if price comes here, better. But here is a level that price may likely come to, and price may likely take off, right? Yeah, equal highs, and here, liquidity and that, right? So I'm still waiting for price to do his own thing at that point, right? Since we are bullish, we are not going to take any setup that would likely give us a bearish signal for GBP, right? Same for Euro USD. For Euro USD, this level is valid. Also, here is also valid, right? So here's also valid. So we have liquidity sweep here, yeah, and fair value gap is still here. So this place is still valid. And as well, here is also valid. Yeah, here's also valid too, right? Because as the dollar will likely hit this point to sell, every other dollar pair that has dollar at the quote side should also drop, right? Yeah. Why for USD I'm expecting a although this level played out, but let's see price rallying again to this point before selling again. So for me, this level is still valid again. This level is still valid. I'm expecting price to come there, right? I'm expecting price to come here again before crashing because this JPY will be very, how will I put it, that the JPY will be very volatile because of the prime minister that is going, right? Yeah, so it will be very volatile, right? So let's just wait and see how it is. Why Aussie is still bullish, right? So for me, this level is still valid, right? A very valid level. Yeah, right. A very valid level and mm, a very valid level. Price might likely come here again and I got to play all the way to the upside. Right? Kiwi, yeah, Kiwi, yeah. So this level is still valid again. Price might retest here again and up it goes. For USD card, I'm not interested in this because card is also bearish, right? Yeah, also bearish. So price is here already. Um, card is also bearish. So from this pair, I might not really trade this pair. USD CHF. Okay, USD CHF. So since price uses this level, I'm expecting price to come here again. Price to come here again before moving. So price might also come here again before moving all the way to the downside, right? Yeah, I'm expecting price to get there. And also the clones as well. I think these levels should also be in the future should price ever get there, but I'm not seeing price getting there, right? Then euro is bullish at the moment, GP is bullish, right? So for euro card, I'm going to target euro card because card is bearish, right? So for euro card, I should be looking for, oh, euro card is bullish already. Should I wait for retracement? Okay, let's wait for retracement, right? Let's wait for retracement before we can buy. So if price does come here again, I think I will likely buy the euro card again. Buy for GBP card as well. I should be bullish about on it as well, right? So I should be bullish on it. Okay. Yeah. So that is it for me. Okay. That is for me as we're already established, right? The dollar is bearish, gold is bullish, GBP USD is bullish, Euro USD is bullish, USD JPY is bearish, Aussie AD USD bullish, NZD USD bullish, USD card. I'm not interested in that pair. Why USD CHF is bearish, right? Yeah, USD CHF is bearish, right? So we're expecting aggressive move of JPY because of the Prime Minister Shigeru Shiba that is likely going to step down, right? Because he lost the election and the new party will likely take over from being a Prime Minister, right? So price will be the Japanese yen will be under pressure, right? So let's see how the news for the week will go. Should he step down, then we'll know what to do next about the market, right? So stay tuned. If you have not subscribed and like my channel, kindly subscribe and like my comment, right? Yeah, and turn on your notification bell in case I post new set, right? So I'm going to be posting some for the meta-analysis topics, right? Hot topics that would likely benefit us, right? So I'm working on them seriously, and I tell you, that is the way to go. Like I've always said, right? Fundamental analysis controls price, determines market sentiment, market bias, right? So, and I've also established that your technical analysis is the aftermath of what fundamental analysis investors or traders, right? What fundamental analysis data are already priced in, right? So if market are priced in for a particular thing, right, it does it in that direction. Before it will happen, before you see it on the chart, we have already known due to fundamental analysis, right? I told somebody on Friday that technical analysis is a lagging indicator because it does not really tell you per se, right? But fundamental analysis is a leading indicator. It tells you where market is going, right? Because we saw that Trump tariff and pressure on Feds, right? And the data that have come out already have given us clue already that the dollar will likely crash, right? And that is how it is. And we have, and since for the past 2 weeks, we have been bearish on the dollar, and that is how the dollar index have been, right? So if you've seen the market, you understand that, yeah, dollar is bearish, right? So there's no point selling there's no point buying the dollar pair, except, you know, the opposite likely happen, but we are still bearish on the dollar, right? So I'm saying this, I know where the dollar started crashing from here. This was when President Trump took out of office as the president, right? January 2020, right? So you can see how because of his policy, the dollar has been bearish, right? Yeah, and rate cuts for the first time this year. These are some of the reasons why tariff pressure, rate cuts, right? Yeah, these are the reasons why the dollar has been very small. But sometimes you see retracements because of some sentimental, bullish market sentiment news, right? Yeah, but nevertheless, the dollar is bearish, right? So this is how you trade, right? This is how you trade fundamental analysis. Fundamental analysis determines your market sentiment, market bias. Then you use technicals for entry. So that is how I and my trading community we trade the market. All right. Have a lovely week ahead. So I'm expecting the retracement, then a crash to the downside for the dollar. All right. See you and have a lovely day. Thank you.